So there's a global view from Musaba. I think it's quite optimistic. He says that scenario is a 70% probability in his view, 30% not. So it's quite bullish. Does that ring for Bank of America?
Hi there. Look, I think it really depends on your views on how we come out of the current crisis. Quite frankly, there are scenarios where that could materialize. At the same time, there are scenarios that could materialize where we go into a second wave of the virus. We see another set of global shutdowns, and indeed, in such a scenario, you would see a much more bearish outcome. So really, it depends on the policy responses of the governments as to how effectively we can come out of the current pandemic, how we can control it, what measures are put in place to keep things in check, and ultimately if the global economy is given the space to grow, in a way where, again, these contagion measures are effective, then yes, definitely. I think a scenario could materialize like that. We are not of the view of 5%. We are, as a house, a little bit less optimistic, and probably we are more pessimistic on how difficult the second quarter is going to be globally. And indeed, if you look at our consensus, if you look at our earnings forecasts amongst all our analysts versus the consensus, we are quite a bit lower. And that really is a function of our more pronounced decline in economic growth in the second quarter of this year. How the second half pans out, obviously, is really a function of the course of the pandemic. But going into next year, we were a little bit less optimistic than that.
Okay, so if we need to perhaps be a little bit more hesitant about the second quarter, has the oil market got ahead of itself? And I asked you that question. I look at WTI this morning, 33.89, Brent, 36.23. You talk about flattening the oil sombrero, the veracity, the curve. I put the curve up for most of our clients to try and get a handle. You talk about the speed with which the curve imploded and the recovery. So where are we in the cycle of the curve? What next?
Again, notwithstanding a second wave, which would obviously be very bearish for the outlook for oil, I think what we're seeing is a number of factors. First and foremost, the recovery in gasoline demand, for example, in the United States has actually in the last few weeks been quite surprising and quite positive. I think that, plus the fact that we have seen some surprise draws in the inventory data in the United States, has also given people comfort that we're not necessarily going to go into the same situation where we had, for a brief period, negative prices for WTI. Now, what we're thinking is that, look, there is still a significant amount of inventories out there, and at the same time, given the capex cuts that we are seeing, like the majors, your previous guest that was talking about the significant amounts of bankruptcies and the like, all of that is potentially going to weigh on longer duration oil production. And as a result, you could start to see the market backwardating at a $40 oil price, which is really unprecedented because typically you see U.S. oil curve backwardating when oil is in the 55 to 60 range. This ultimately means that it's going to be very difficult for oil producers to hedge their production into the longer term, giving them access to the finance that they need. And this could be a bit of a problem. And it could indeed weigh on future production as well. So, the way that we're looking at things, yes, there has been a recovery without a second wave. We think that oil prices could move up. But, notwithstanding, there is potentially a situation where backwardation comes through until we start to see the natural decline coming through in production in Q4 of this year, and we start to work through the excess inventory.
Hootan, we're just trying to get our comprehension of the scale of losses around the world 36 million people unemployed in the United States of America, 7.5 million people furloughed in the United Kingdom. Here in our region, we're looking at potentially here in Dubai, we've got a story overnight from Zina Fatah. We're looking at 43,000 rooms closed. We're looking potentially at 30% of our food and beverage industry disappearing. And tourism is 11.5% of our economy in Dubai, perhaps a little bit less impinged in Abu Dhabi. These numbers are really beginning to mount, and you begin to visualize the headwinds that we've got in the UAE, don't you?
Yes, absolutely. And, I think that certainly the UAE has faced an onslaught from weaker oil prices, as well as travel and tourism, the airlines, the transportation industries, the tourism industries. These are all very big. But the government has announced some support measures. So we haven't necessarily seen this filtering through into the banking system yet. Nor have we started to see any big wave of bankruptcies. And certainly from a banking perspective, you could start to see that having some negative consequences. If we look through the first quarter earnings season, the banks did start to take some provisions, but I think that if you look towards the second quarter of this year, a lot more of the expectation for weakness will start to filter through into the numbers. Because I think management teams and the like have been looking at how bad can this get, and they will start to reassess their expectations and reflect them more in their provisioning and in their risk profiles, or expected credit loss models, as they call them. And I think you will start to see that filtering through into the numbers into the second quarter. And then that will then start to translate into more businesses not being able to service their debt, et cetera, probably in the second half when you start to see more of the non-performing loans beginning to come through. Remember, the banks have to act preemptively because of the accounting standard IFRS 9. So they have to take the provisions before they see the loans getting worse. And that's the process that we're going through now. So back end of this year, you will start to see some of that stress being visible in the numbers. We've certainly seen the PMIs, et cetera, reflecting some of that, but it's potentially going to get worse in Q2.